Okay, I'll go ahead and kick off the intro and we'll let people continue to roll in through my intro. So, welcome everybody. Welcome to our webinar hosted by Co-op Innovation Network. By way of introduction, the Co-op Innovation Network endeavors to unlock the potential of rural electric cooperatives across the nation to drive energy solutions, grow job creating regional energy economies, and advance policies for local energy democracy and energy justice. Today, we're thrilled to have all of you co-op board members, staff, and industry partners joining us to explore one of the most impactful tools we have for advancing energy equity, member engagement, and grid modernization. That is on-bill financing. As cooperatives, we know that the challenges we face can be as unique as the communities that we serve, whether it's supporting low to moderate income members, making our energy systems more resilient and affordable, or driving forward with ambitious climate goals. Financing is at the heart of how change happens. On-bill financing is one of the most promising pathways to align our mission with practical solutions. On-bill financing allows electric cooperatives to fund energy upgrades directly through members' utility bills. It removes the biggest barrier to clean energy and energy efficiency adoption, and that barrier is upfront costs. For rural communities where financing options can be limited, this model has the potential to transform the way energy improvements are financed. Programs such as Pay As You Save have demonstrated that on-bill financing can not only help members save on energy bills, but also enhance system performance, reduce arrears accounts, and strengthen cooperative member relationships. For cooperatives, it's an opportunity to reinforce our core values, powering communities with fairness, affordability, and innovation. So we're very fortunate today to be joined by two leaders in this space who bring deep experience and practical knowledge. First, we have Mike Morley, the Director of Corporate Communications and Government Affairs at Midwest Energy. He's one of the founders of HouseSmart On-Bill Energy Efficiency Program, and a program that has been a model for many cooperatives across the country. And we also have Ronnie Cannon-Chapman, representing the Collective Clean Energy Fund, whose work is focused on unlocking capital to support community-driven clean energy solutions, including through cooperative and place-based financing strategies. Both Mike and Ronnie are working at the intersection of innovation, finance, and member service, the exact space where cooperatives can lead. Today, we'll walk through how on-bill financing programs work, how they can be tailored to your cooperative's needs, and why this approach is a powerful investment in your members. After the presentations, we'll open the floor for questions and conversation. So we'll be recording the presentation portion of this, and then as soon as we get to Q&A, we'll go ahead and turn off the recording so everyone can be free to have whatever type of dialogue they want. At this point, I'll go ahead and turn it over to Mike Morley first. Mike, go ahead and take it away.
All right, Ted, thank you. So Midwest Energy, just by way of where we are, we're in the western half of the state of Kansas. We start basically in the middle of the state, work our way over to the Colorado border, all along I-70, and then we go up north to Nebraska and down south to the Oklahoma border. We have 93,000 meters, 50,000 electric, 43,000 gas. So we're one of very few co-ops in the country that both has electric and natural gas retail service. We were vertically integrated, so we have transmission and generation as well. So kind of a very unique co-op. What drew us to the HouseSmart program back in 2007 is twofold, and we can do next slide. First, we wanted to start a pilot to try and do some kind of innovative things with regards to energy efficiency and on-bill financing. That in 2007 was a very new thing. In fact, we spent 2 years in the Kansas legislature getting them to change statute just to allow utilities to do on-bill financing. There was a little bit of pushback from financial institutions, claiming it was anti-competitive, et cetera. But in the end, we prevailed. So we came up with a program called HouseSmart. And what that does is it provides money a mix of co-op and customer money to make energy efficiency improvements like insulation, air sealing, and then HVAC. We found those three items are where we see the biggest bang for the buck, if you will, in return or in terms of efficiency. We get a lot of calls from customers wanting to upgrade windows and things that are maybe more cosmetic that don't yield quite the same savings. And we generally don't allow those into the program. We started this program with about $2.5 million in seed funding. That came in through three tranches. 2 million of that came from USDA's Red Leg, the Rural Economic Development Loan and Grant Program. And then we got about $500,000 from the Kansas Energy Office, which is now defunct. But the program now is completely self-funded. Those loans were all zero interest loans. And as participants make payments on their loans and their upgrades, that goes to fund the next series of upgrades. The program is open to both electric or gas customers with the stipulation that they be in good standing, defined as a clean payment history over the past 24 months. The home or the building must be attached to a permanent foundation. So it can include manufactured homes, but they have to be attached to a permanent foundation. It can't be a mobile home that's on a wheeled trailer or something like that. And lastly, this can be done for residential, commercial, or rental properties. But in the case of a rental property, both the landlord and the current tenant must sign and agree to the terms of the program. So basically, it's a four-step program. The customer expresses interest, and we send an auditor out to their premise. Midwest, we have 5 auditors on staff currently that do house smart audits, and they are accredited through the Residential Energy Services Network, the Home Energy Rater certification. Auditor visits the site and provides a report. Basically, it says, hey, there's 3 options. There's a high option where, this, the soup to nuts, everything that we can find wrong, we try to fix under that option. Then there's a medium option, and then just the low-hanging fruit. If somebody's on a budget and wants to stay very economical in their approach, we can offer them that option as well. And we also, at that point, share with them what the customer contribution and what the Midwest contribution would be. Typically, it's about a 60-40 split, but there are some situations where a home is just very inefficient and it makes sense where Midwest can provide up to 100% of that cost. So 60-40 again is typical. We give the customer the options, and from that they can select their contractor from a list of approved contractors. And these are HVAC companies, small contractors that do insulation, et cetera. Often, firms of 1 to 5 people, perhaps, in some of our smaller communities. To get listed as a preferred contractor, they simply have to agree to follow building code when they make the improvements, and to work with our auditors if we find any deficiencies in their installation. So the customer goes ahead, gets those improvements made, and then the auditor makes a second trip out to the property for 2 reasons. Number 1 is to evaluate the installation of the equipment or the improvements, and then to get agreements signed between the customer and Midwest Energy. And that's the point at which those house smart charges begin to appear on the bills. And lastly, the term is 15 years. So the improvements are paid off, and then at that point, it comes off the bill. Next slide. Just shows a visual representation of what our auditors do on the premise. They do an inspection of the current HVAC system. They take out a FLIR gun and they do a thermal scan of the walls, the ceiling, looking for insulation deficits and any air gaps between windows and doors, things like that. They also do an on-site blower door test, and then, of course, meet with the customer and explain the options. Next slide. So this is a summary of how we're doing year to date on House Smart. We've done just at 140 projects, totaling $1.3 million. Our share of that, again, at 60/40 formula, is pretty much right on this year. 785,000 on behalf of Midwest, the rest coming from customers. So the average project cost to Midwest has been 5,600. If you look at the 1.3 million over 139, it works out to 9,400. So right in that $9,000 to $10,000 mark is usually what we see for a new air conditioner, some air sealing improvements, which is usually a couple $100, and then some insulation, maybe some blown cellulose in the attic. Since 2008, we've averaged about 163 per year. And again, that investment, the project cost has been pretty similar. You'll note that we've done 30 fewer projects this year, and we're already at the annual average. I owe that up to inflation and just what's happening in the market with HVAC and things like that. Next slide. This is a summary of all of our years of House Smart participation. We're just under 3,000 projects. I think we'll hit that probably by May or June of 2025. 16.8 million total investment. Again, that's the combined customer and Midwest Energy. And then if you look down in the middle, that middle section there, project costs, you'll see how in some years it's gone up, 1.7, $1.8 million. And now we're back down to the 1.3 million range. The average projects, House Smart did start fairly modestly. The emphasis in the first 2 years was more on air sealing and insulation. And that's why those project costs are in that $35,000 to $5,000 range. Once you start adding in the air conditioning, those projects started to go up in terms of total. Next slide. Again, House Smart's a pay-as-you-save structure. So our investment is paid back through a charge on the bill, but the charge must be less than the estimated savings associated with the improvements. And you'll see some examples of that on the next slide. The interest rate that we charge for our portion of costs is 3% over 15 years, which is about a point and a half below the commercial rate. And the House Smart program fee is 5% of Midwest's share of the investment. That's assessed for each project. And again, we build that into the monthly cost. And you'll see an example of that on the next slide. Customers are not allowed to do when you pay your mortgage, you can add an extra couple $100 and apply that to principal. House Smart doesn't allow that just because of the simplicity and the structure of the program. So you can't double up on payments or make additional principal payments, but we do allow customers to pay off the project in full at any time during that 15-year period. And we've had a couple instances of that. Next slide. This shows the options that we give customers in terms of the heavy, medium, light. In this example, option A is the light version, some air sealing and a new HVAC system. Option B gets into some wall insulation, and option C is additional insulation, the air sealing and the HVAC. And here you see a breakout of the fees. So you can see the House Smart's the estimated monthly savings in example C is $78.32. So the House Smart surcharge again has to be less than that amount. So it's $70.49, which yields a bill savings of $783. So again, looking at this example, our auditors make estimates on what the savings would be for each example. So let's look at example C. You can see that currently we estimate they're spending about 764 kilowatt hours a month on heating, 4,368 kilowatt hours on cooling, But if they choose this option, we estimate they can bring that down significantly. So you see the savings just by making these upgrades. And this is something our auditors see a lot of. They'll go into some of these homes and it might have an HVAC system that's 30, 40 years old and still running, but highly inefficient. So just by making that one change, the savings can be significant. Next slide. A question we often get is, do we put a lien on the property? Not a lien per se, but we do file a UCC form down at the courthouse with the Register of Deeds on all of our HouseSmart projects. And basically that is a flag for potential buyers or real estate agents that, hey, there's an encumbrance on this property that needs to be addressed before a sale is executed. So if a home is sold before the charges are paid off, we have the seller do a written disclosure that there's a HouseSmart on this house. And then the buyer can assume basically that HouseSmart loan. If written disclosure isn't given, then the owner is obligated to pay off the balance of that project within 30 days of closing on the property. And again, that's a process that usually goes fairly smoothly. We've had, my gosh, in the last 10 years, maybe 2 or 3 instances where a seller conveniently forgot to disclose to the buyer. They close, and we end up in a courtroom trying to get back that balance. So it's rare, but it can happen. So that, in a nutshell, is the HouseSmart program. Again, just under 3,000 projects. It's one of the touch points that we have with our customers that yields the highest satisfaction ratings on a 5-star basis. Customer satisfaction with HouseSmart is 4.85. So it's a very popular, very well-liked program. One last thing I'll mention is we don't do a heck of a lot of marketing with HouseSmart. We did in the first maybe 5 years, promoted that fairly heavily. Now it's word of mouth, frankly, and it's the contractors themselves that tend to be the best pitch people for HouseSmart. And frankly, word of mouth, between customers that have had a successful project, they'll tell their friends, tell relatives, and then we get a lot of inquiries based off those. But the contractors, I say, do at least 70% of our promotion for the program.
Super, Mike. Thanks very much. Questions. Let's hold questions until after our second presentation, and we'll open it up for verbal questions. But if there's anything that you have on your mind, go ahead and type it into the chat, and we'll field those questions for Mike and then for Ronnie as well. Yeah, thanks again, Mike. Great presentation. Let's go ahead and turn it over to Ronnie. And Ronnie, go ahead and provide us with a little intro before you jump into your presentation.
Good deal. Thank you, Ted. Well, thank you everyone for taking the time. Happy to meet with everybody and answer any questions we can, of course, at the end of the call. But my name is Ronnie. I'm the residential program manager with CSEF, Collective Clean Energy Fund. We're the Green Bank of Colorado. Originally, we were incorporated in 2019, an initiative from the governor's office. And then our first receipt of capital was in 2021, which was at the time $30 million. Since then, we have grown 3 of our programs, which is 2 for residential. One is a standard home improvement loan called the Renew Loan Program, available to the entire state of Colorado. The Electrify and Save program, which is the program I'll be speaking on today for tariff on bill repayment. And then, of course, our commercial team. That $30 million investment has since grown to a portfolio worth $250 million. And we'll continue to do that on our commercial side and grow our residential programs as best we can as well. So on the topic of TOBR, I already mentioned it, but the Electrify and Save program is a program launched in partnership with us by Tri-State Generation and Transmission. They are the poles and the lines for all the participating co-ops here in Colorado, which right now are 7 of them. They were awarded, we assisted them in gaining a grant from the USDA through REST funding. It was $50 million in order to fund this program. And then eventually, of course, ideally go back for more tranches if available. But that was the initial investment from the USDA to fund the Electrify and Save program. Now, as I mentioned, 7 cooperatives in the state of Colorado currently participate. It's approximately 114,000 meters across the state right now. Tri-State does have 15 cooperatives in the state of Colorado. Naturally, our objective is to offer it to all cooperatives across the state. Most of these at the moment, they are all classified, all cooperatives participating are classified as rural at the moment. Tri-State is a rural generation and transmission company, and as are all of their members, which is again why they were able to get that USDA funding. So right now, 7, we have a very similar process and policy in regard to participating in the program that Midwest does, and it starts very similar. So you'll have a member, they'll submit their interest form, they have to meet the billing criteria, they select from our contractor network, they install that measure, and then they see that rider populate on their bill. A lot of the times, what we see is members taking advantage of 2 programs here. So they're going to take advantage of our on-bill repayment program, but they'll also bundle that with some weatherization improvements or income qualified based programs. So a lot of the time we will see a similar split where a lot of the costs, let's say it's a $10,000 ticket, $4,000 to $5,000 worth of that is paid for through rebates or income qualified programs. So they're only financing, if you will, half of that project at about $5,000. The billing criteria, to get a little bit into the weeds on it, slightly different than Midwest. We look at 12 months of history. So in the past 12 months, you have to have no disconnections. And then in the past 6 months, you are allotted 2 late payments. If you have 2 late payments or any late payments at all, you must enroll in auto pay as a member. And even more than 2 late payments, you would not be eligible. You, of course, also have to own the property. Utility bill needs to be in your name. So we do not have this available currently to renters, but the policy would be similar in that the landlord would also have to agree to the programmatic guidelines in order for that renter to participate. Now, the measure itself, it is, of course, meter tied. So we do not file a UCC1, but we do file a land records notice. And so that means that charge, whatever the payment is, will follow the owner of that property. So in the case of a sale of the property, there is a disclosure that's required, and they will, of course, transfer that when they sign up for utility services under that next homeowner. We still have some guardrails in there when it comes to the line item itself. So they are agreeing whenever this rider is placed that it is now a necessary part of their bill, meaning if they choose not to pay it, they risk disconnection. So that's a key thing here. Since we are not filing a UCC1, since these are treated essentially as personal financial obligations, not a traditional loan, of course, we have to have something in place that, of course, incentivizes them to keep paying it. So they do risk shut off should they not pay it or should they get into a situation of hardship. All right. There are 4 partners involved in the administration of the Electrify and Save program. We at CSEP are the administrators of it. So what that means is we manage the contractor network, we manage the entire tech stack for the program, and we also, of course, administer the technical review and the processing of applications from start to finish. Tri-State is the program sponsor, of course. They have the money. They fund the program with the $50 million grant, but they also oversee all the consumer marketing. So Tri-State acts as that parent company to all their cooperatives. So they oversee the consumer marketing side of this. Then we also service these loans internally at CSEP as well. Let's get into some of the other details about the program as well. So what do we allow? Most of the common measures we allow for the program. So that's going to be your HVAC, but specifically that's going to be limited to ground source and air source heat pumps, air sealing, insulation. We do allow windows and doors on the program, which I'll speak on here in just a minute. Any other items such as ERV, heat pump water heaters, the program itself is electrify and save. So when it comes to HVAC, any electrification measure will be allowed. And then there are, of course, air sealing and insulation and additional miscellaneous measures that we allow. We do have a cutout for 30% health and safety. So if you have a $10,000 ticket, $3,000 of that project can be dedicated to items like radon mitigation, mold remediation, should that be discovered in the removal of a heat pump system or a water heater, whatever it is, that can be included, capped at 30% of the total project value. I already touched on this, but further drive it home. To be eligible, you of course got to own it, got to be on the utility bill. Our rates and terms are, there are 4 options. So you have a 3-year, 5-year, 7, and a 10. They go up 1/4% at each band. 3 years 4%, then 4 1/4, 4.5, and 4.99. There are no fees associated with the loans itself, but they are fixed and tied to those terms. Keep rolling here. We do offer assessments. So every cooperative that Tri-State manages those relationships. We support it after they onboard, but every cooperative gets to decide if they would like a assessment to be completed on that property. So essentially an assessment on what they should focus on. Very similar to what Mike touched on, is it's a plan that's put together, paid for by the program, what those homeowners should prioritize when it comes to improving the efficiency level of their home, whether that be electrification measures, air sealing, windows and doors, whatever it may be, that is offered. Cooperatives choose whether or not they want to make that a requirement. We only have one cooperative right now that does require it. It's our second largest cooperative. But all other cooperatives, their members have it available as an option that is free to them. The way our assessment really program works is we have authorized contractors that offer either virtual or in-person assessments. So again, the member gets to choose whether it's required or not. They'll get to choose if they want to take advantage of one of the free assessments. What we expect, since this is some of the relationship that we manage of our contractors, is we have a very, very strict guideline for who is allowed to participate in the program. We have a network of just over 200 contractors, and they're all local for the most part. We do have a few larger windows and doors contractors that are nationwide, Pella being one of them. However, contractors are held to very strict guidelines, and they are expected to, of course, maintain excellent reputation, maintain on-time licensing. Contractors will be put on probation for any type of expiration in licensing and potentially removed for any lagging corrections to those issues. So because that is one of our responsibilities at CSEF, we keep a very, very close eye on our network to ensure that they are the best possible representation of what's available to members that we can offer. All right, program itself. So Electrify and Save is new. We launched this program in March of last year. And it was essentially trickled up on how many co-ops participated originally. In March last year, we launched it with one co-op, and then they fell down to 7 as the months went on. Formally, a year of the program passed in September with all 7 co-ops being active. During that period, the program itself, touch on some lifetime numbers and then year to date, and like to let you guys know where we're at on the measure spread too. So lifetime itself, we've funded over the past year, 16 months, if you will, 90 projects, $1.6 million financed. The project value is a little bit higher, so that's the actual finance value, 1.6 million at 90 projects. Most of those, unsurprisingly, are windows and doors, about 49% of the pipeline. The second in line is HVAC, so any air source heat pumps, ground source heat pumps, ERVs, what have you. That's what we expected, truthfully. We do have some guardrails in place for windows and doors. For instance, we will not allow a double pane to double pane replacement just for the heck of it. There has to be a justification. So for instance, if it's single pane to double pane, that will be allowed. Or if there's damages, we will allow that replacement to occur. Year to date, we are tracking to be at 96 projects this year funded. So far, we have funded 73, a little over $1.3 million financed. We anticipate 20% growth year over year. So next year, 120, and then so on and so forth. Ideally, we of course grow the co-op spread as well. Very high level on what we do on the CSEF side, but again, we'll continue to grow it as we cut away at the rest funding, that $50 million grant. Right now, it's relatively small, but we've cut away just $1.6 million. And then I want to speak on to the impact on the rebate side. So of that 1.6 million that's been funded, 240,000 of that was rebates. So technically, we're looking at a pipeline of $1.8 million, and then $240,000 worth of rebates applied as well. We treat our rebates as direct to contractor. So if you have a $10,000 ticket, $2,000 eligible rebates, contractor gets 10, homeowner pays 8. We try to simplify the process as best we can. We offer a portal, of course, to all of our contractors and our members, and they process everything directly through us. Again, very high level, but I wanted to get to the questions as well.
Great. Thanks, Ronnie. Maybe before we jump into questions, I'll just give you the opportunity. Give us a teeny bit more on what CCEF does in addition to um, these residential programs.
Of course, yeah. So outside of on-bill repayment, you mean?
Yes, sir. Yes, sir.
Okay, so we have still underneath the residential department, we have the Renew Loan program, which is a standard home improvement loan. It's a low fee loan administered through local credit unions of Colorado. That program has done well over 3,000 projects since 2022, which is when we took that over from the Colorado Energy Office. Um, Commercially, that's where most of our capital has been driven. However, we have financed 50, just over 50 commercial projects during CSEP's life from that first capitalization in 2021, which is how we've gotten primarily to that $250 million portfolio. Our main focus at CSEP are LIDAC communities. 49% of our portfolio is segmented to that. So most of our portfolio is dedicated to those communities. And we serve the entire state. So our commercial program services all counties throughout Colorado, as does the Renew Loan program, with the exception of Electrify and Save, that is co-op specific.
Great. Thanks for that additional information.
Of course.
Let's go ahead, Kinsley, if you would, and shut off the recording, and we'll move into Q&A.
Good. Well, thank you, Ronnie and Mike. That was fantastic information.